Hello everyone, welcome back to the channel. Thank you for joining me today. In today's video, I'm going to be going over my net worth update and going to be going over the power of patience when it comes to investing and how most people become wealthy. And if you do like content like this, please consider liking the video and subscribing. It would be greatly appreciated and you could stay alert to future videos. So I calculated my net worth last time in July, and since then my net worth has increased by about $5,500. Part of that, or a major part of that, is because of the increasing stock market. And the other important part when it comes to my net worth is if you see to the left my assets column, and then to the right my debt column. My debt column went down substantially and my asset column did go down, but not as much as my debt column. Now the reason why my assets went down but my debt also went down is because of the student loan pause has ended. So I decided to take a decent chunk of my savings that I had and use that to pay off debt. So last month I did make a $10,000 payment, and that of course brought my debt down by about $10,000, and I made another small little payment also with that. So that is the explanation for my debt going down, but my assets also going down. Now, the great thing about this is that although I did put $10,000 to my debt, the overall decrease was kind of nulled out, because all I did was took, of course, again repeating, took $10,000 from my assets and paid off my debt. So my net worth, which is assets minus debt, didn't really decrease at all, because that cash was just transferred to paying off my debt. And during that time, of course, my net worth also increased about $5,500 due to the stock market rising. So I didn't even really feel the impact of losing that money, and it basically made no psychological difference to me using that $10,000 to pay it down. It's going to be owed anyway, and a lot of that money I was saving up over the pause cycle to pay down my debt regardless. So I didn't really feel bad when I made that payment. And also during that time, which isn't shown here because I don't track it, I did put quite a significant portion of money away to my personal expense account. That is money that I fully intend to expend on personal things. I do have a trip upcoming, so I plan to basically blow that money on that. So I don't think that it's a good idea to track money that I know is going to be gone. It gives me a false sense of my net worth when it's going to be gone. So I'm not going to include that. And also some of that money is going to be going to cost of living increases that I'm going to have to pay up front. So I don't want to track it for that reason. So even given the money I put away from that, which was honestly a significant amount of money, and paying down my debt, my net worth still increased. So it's pretty fantastic that I didn't even feel it. And my student loans are basically paid down quite a bit too at the same time. And if you remember from past videos, I made this chart last month a lot more pretty, I guess you could say, and well put together. I did some highlighting to show my net worth just to have it more visible. And I also put a filter on it to kind of display down months and up months very better to pop out easier. So just kind of for eyesight and tracking purposes, overall organization, I did that, and it makes it a lot more pretty, and I did it to kind of gamify the process a little bit, making it a little bit more entertaining month by month as I track. Now, if you were an earlier subscriber to my channel, you may have noticed that I was putting out videos quite frequently, about once a week or even 2 a week. But that kind of ran to a pause because I realized to be a good YouTuber, you have to put out a bunch of videos, but then it kind of came at odds with one of my kind of investment principles, and that is to not let noise determine your financial kind of process. And my process is to just simply dollar cost average over time and not let any financial news kind of get to me when investing. So when most content creators in the investment field make videos, they kind of post these updates to occurrences in the global economy or local economy. And they're able to produce content very quickly because they're always speaking about something new in the basically investing world. And I think that's kind of a disservice to you because you get that information and you think that you should act on it, and I don't believe you should act on it. So like here you have a YouTube search of the recent credit downgrade, and you see quite a few videos about this credit downgrade. And had I have made a video specifically pertaining to this, I think it would be a disservice. And that's simply because a credit downgrade has happened before for the United States, and we pretty much came out on top, of course. Actually, not pretty much, we totally came out on top for a country in the investing world. So last credit downgrade happened on August 5th of 2011. And during that time, the stock market also fell pretty significantly. So these are two Wikipedia pages kind of giving you the idea that this was big news at the time, and it's big news today, but really it's kind of a disservice if I were to kind of speak about whether you should act on this information when it comes to selling or buying, because since 2011, the United States went on a huge bull market, and we were, of course, a lot better off. So that noise, I think, would be a disservice if I was just talking about financial matters in general, and I'm just using this as an example, this credit downgrade, because it's in the news, but this applies to kind of any financial matters. It's just noise overall, and over time, you're not going to worry about it. And I remember COVID was going to be, like, of course, the financial end, and we were never going to come back to it, and then we boomed, and we're all the way up again. So, again, speaking as, like, an investor that just invests and forgets about noise, I don't want other people to think that, oh, you have to act on all this news. You really don't. And unfortunately, as a content creator, like most people, they kind of do have to put out these videos. So here's a video posted a few days ago by a pretty big YouTuber, Joseph Carlson, who acts in the same space as me, which is the investment space. And of course, he made a video. The US was just downgraded, about 53,000 views in only 4 days. So he, of course, makes content much more frequently than me and has a bunch more subscribers, and that's, of course, good, and people like that content, and I don't blame them, because even I, of course, watch CNBC. It's just a way to occupy time, but I don't let that get the best of me. So anyway, a few days ago, I did buy a book called The Psychology of Money, and I'm about halfway through right now, and I do think it is a pretty good book when it comes to investing. It speaks more so, of course, in the title, more about psychology than it does about the quantitative factors when it comes to investing. So you're not going to find talk about earnings reports or, revenue increases, or interest rates or credit downgrade. You're going to find more so personal factors that really drive people with their money. And kind of one of those principles in the book that it covers is kind of wealth generation overall and patience in investing. And one of the topics it goes over is Warren Buffett investing. And one of the incredible concepts probably that people don't know when it comes to investing is that Warren Buffett made most of his money after the age of 65. So 95% of his wealth occurred after the age of 65. And I think that's incredible because people don't put enough credit on just patience and just riding the waves and just letting things happen around you. They kind of go for these, when should I buy? When should I sell? What's the next bull market? What's the next bear market? What's going to be the cause of it? And then they buy and sell, and you're just timing the market. And it never really works in your favor. Actually, most people would probably lose money from timing the market. So I think this article and this idea is really solidifying the fact that you should just wait and let compound interest work for you. Now here's a chart of Warren Buffett's net worth, and you see his growth was just explosive. It was incredible. And you kind of see how it happened, but it just went up and up and up. So kind of the most guaranteed way to become wealthy when investing is just to stick to a single process, and mine's dollar cost averaging. And I think that should be pretty much everybody's process, and just never stray from that and live a long life, and you will, I don't know if you'll become a billionaire, we can all hope, but you'll definitely come out a lot more wealthy over time than if you were just kind of switching from strategy to strategy to strategy, riding the wave of the next hype or the next sorrow. And so I've only been tracking this for around 3 years, not even. And as you could see in the beginning, my changes weren't as significant. So 2,000, 3,000, 3,000. But now I'm starting to get more significant increases. And of course, if it comes down to it, I will get more significant decreases too over time. So of course 5% of 10,000 is 500, and then 5% of 100,000 is going to be 5,000. So the more money you have and the more time you had to compound, more money you put away, the faster and more impactful your net worth is going to be. Of course, as the saying goes, the first 100,000 is the most difficult, and that is because after that, compounding starts working much better for you. So before I end this video, I guess the point is to highlight that don't really pay attention to all of this news. This is just noise. If Warren Buffett would have sold out in the dot-com bubble, he wouldn't be as rich as he was now. As he would have sold out during the recession, he wouldn't be as rich as he was now. If he would have sold out during COVID, he wouldn't be as rich as he was now. So that's kind of it. Thank you all for watching today, and enjoy the rest of your day.